Hello, this is my presentation on Chapter 2, Problems 11 through 13 of the Access quiz. This is for me, the fun parts of learning how to do accounting is actually doing the accounting. So this little section is us doing a income statement, a retained earnings statement, and a balance sheet for a company called Carmen Camry. So here's our problem. Carmen Camry operates a consulting firm called Help Today, and we are getting their December 31st records in order. So we see here their journal entries. And the first thing we're being asked to make is the income statement, which is the first thing you would be making. So it goes to order. So income statement is the one where we do your revenues and your expenses. So that's all we're going to look to plop in there is revenues and expenses. So we can see up here that what we have is consulting revenue. So we're going to enter revenues here. And then our consulting revenues. Which was a total of $27,040. And there are no other revenues up here. So that is all that we're going to balance against. So the bottom half is the expenses. So we're going to call this expenses. And then we're just going to go down the list and populate it with the ones that are there: rent expense, salaries expense, telephone expense, miscellaneous expense. When we get further on, we have other expenses that we add in, like depreciation, related to depreciation. So this is just the beginnings. So the first one we're going to add in is rent expenses. And that is $9,590. And salary expense. You'll see repairs expense on there of our options, but that's not one of the accounts that we're dealing with. So just kind of tossed in there in case you might need it. So salary expenses are $5,640. Just put that right there in the debit column. The next one is telephone expense. Which is $920. And the last one is miscellaneous expense. And we're also learning that those are where you can drop things like bank fees, or just anything else you can't classify into a certain account. So now we are going to go here to the, so here's our total revenues, our total expenses. This box, and the purpose of the income statement is literally, did we add or subtract money? So our total is going to go there of how much that is. So I'm going to subtract. Oh, here I can do it on this. Look at that. I'm going to subtract the 16,700 from the 27,040 that we brought in. That leaves us with $10,340. which means it was not a loss. Let's see, our choices are, did we lose money, net loss, or did we get money? We made money, so it's net income, but we're not quite done yet because we need to write down the very top line, which I get wrong all the time. So let's make sure I remember it this way. So it should be month ending December 31st, I believe. Let's see if I'm right. I'm going to check my work. Oops, how did I? Oh, apologies for my bad eyesight. I have to have eye surgery. So hence, you saw I got the right answer. I just typed it wrong. So let me go back to the question. Add this in. Okay, now we're correct. Da, 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 da. So now we go on to the next problem. But the next one's a retained earnings statement. So we're going to need this net income right here. We're going to need to know it. I can copy it now or come back for it, but let's move forward to doing the statement of retained earnings, which would be the next statement you do. So we're still at the same Carmen company. We're still doing the exact same thing. And we need to, this time is retained earnings. So the first thing we look at is retained earnings. So there's none listed for last year. As a matter of fact, it says here again, the retained earnings account balance of December 1 was 0. So it's already been put in for us. So we're going to find the answer now. So what we want to do is we want to list the current retained earnings. And that is your net income. And there's the amount from the previous page. So we don't actually have to go back to that page. So we add the net income, which was $10,304. And I'm getting really close to my, $40, getting really close to my computer now. So I don't make that number 9 mistake again. And down here, the thing that goes against our retained earnings is our dividends. So we paid out dividends of $6,040. So we're just going to less, you have 2 options here. See if I can show you both of them. We're going to less our dividends. And like I said, that was, whoops, 6,040. So what we have down here is retained earnings as of December 31st. We started with December 1st. We're ending with December 31st. And again, we have to go back to the header and do the time frame. So month ending December 31st. Let's check our work. Correct again. We're going to be needing to remember this number of our retained earnings as we move on to the balance sheet. Same company, same journal entries. Here we go again. So the balance sheet is where we put assets, liabilities, and equity. So this is a different set of things than what's going to give us our net income. So we're going to start on the left side is where assets go. So here we go. So now we look up what are our assets. Well, our number one asset is that we have cash. And the cash total is $25,400. We also have accounts receivable. So it's anything that will bring us, that we can liquidate, that is owned by us, is your assets. So we put in the 22,410 for our assets. We also have office supplies. And the ones we own are assets. Once we've spent them, they are removed from that column. So office supplies, that's 5,300. Then we have office equipment, which is another asset account. Whoops. This is for 20,000. Whoops. And $50. Whoops. Sorry. And last but not least, we have up here land. As we get further into accounting, land kind of moves into a different part of the asset column that is meant for more long-term investments. But for now, we're doing a simple balance sheet. So those, going back up, those are all of our assets. I don't see any more that are there. So this is going to help us determine we now need to balance the other side with this side. So our total assets is $100,017. Wow, 100,017 and $200. So that's, this side is going to have to equal the same. So we're going to start with our liabilities. These are the things that we owe, the debts against our company. So looking up in liabilities, we see accounts payable for 10,500. So we're going to enter that. Oops. Barely making a drop in the bucket of our total down here. We do not enter any of these expenses. We've already put them on the income statement. We don't add the revenue. We've already accounted for that on the income statement. And this is just assets and liabilities. So this next, so we're done. We don't have any more liabilities. So this next section is equity. This is what the shareholders or owner of the business has in their investment. So we have some common stock that's been issued that funds our company. It's right here. And it's $102,400. Oops. Telling you, I cannot see. Okay. So we also, this is also where we can add in our dividends, because that goes on the equity side. Those are payouts to our shareholders. So it shows what our equity is doing. Whoops. Oh, I'm lying. I have lied. It's retained earnings Wow, busted me. Our retained earnings. So remember from the previous page, let's go look. Wow, our retained earnings were 4,300. So go back here. So retained earnings are 4,300. And ta-da, both sides equal. Now we have to fill in some of this additional information, like this side is our total assets. This side is our total equity and liability. So total equity, liability. Choose that. And the balance sheet, again, we have to put the date in. And for this, we enter as of December 31st. And there you go. It's really just a matter of being able to identify the accounts, the account names, to make sure you know what goes where. So again, we'll go backwards. The balance sheet has an as of date at the top of it. It features assets, which are anything that the company owns, anything that gives them a foot up. Liabilities, which is anything they owe people. Equity is what the shareholders, owner of the business have, how many stocks we have, how much people have gotten paid for them. And we compare the total assets to the total liabilities and equities, and we want to make sure these balance. And going back to the statement of retained earnings, again, this is dated for a time period. You take last year's retained earnings, apparently they had none, and you add in the net income that you got from your income statement. You take out the dividends that were spent, paid for out of that money, and that leaves you with your retained earnings at the end of the month. So it's the beginning of the month, end of the month. And first, we would have done, since we're going backwards, the income statement. Again, this is for ending of a time period. And the income statement is revenues and expenses. It's how you earned your money. So we earned money consulting. That's it. There was no other earned money. And these are our expenses as listed in the entries above. We take the total number of revenue minus the total number of expenses, and that leaves us with our net income. So you see how they all cross-reference into each other. If you get one wrong, you get them all wrong. This one probably is the easiest to get wrong because there's no balance at the end of it. And you can carry that over. If you added this math incorrectly, you could carry that into this statement of retained earnings. You could get the wrong total here. And you still wouldn't be quite aware what had happened until you got to here, where both sides have to balance, and this acknowledges the things we've done in the other paperwork. This is how we got the retained earnings. So if this is off, the whole thing's going to be off. Anyway, I hope that helped. Like I said, I think this is a fun part of accounting, is actually doing the things as opposed to vocabulary and regulation entities. So good luck.